Hello everyone, welcome. I'm Nilesh Shah from Nilesh Shah Financial Services. Today's session is very short, focused training for e-commerce business owners on one thing that impacts everything, cash flow. If you have ever felt like sales are up but cash still feels tight, or you are growing but the business feels more stressful instead of easier, this will help. In the next 15 to 20 minutes, I will walk you through a simple cash flow framework I use with the e-commerce clients so you can see exactly why cash gets tight and what to fix first. All right, let's get into it. Last time I went live on 7 cash flow mistakes e-commerce owners make. Today is the follow up. Today I want to show you what fixing e-commerce cash flow actually looks like in a real business. Quick note before we start, cash flow is not just accounting, cash flow is decision making. When you manage cash flow, you reduce stress, make better choices, and scale with confidence. So, let me share a screen with you guys. I hope you can see my screen. Here is what we will discover in the next 15 to 20 minutes. First, why e-commerce cash flow feels tight even when sales are up. Second, the three pillars of strong e-commerce cash flow. Third, practical examples you can apply this week. And then I will show you the next step if you want to help implement this inside of your business. Let me start with the truth that surprises many store owners. Sales do not equal cash, profit does not equal cash. And we all agree on this. You can have a great month in Shopify and still feel broke. Why? Because cash flow is timing. It is the timing of money coming in versus money going out. In e commerce, you often pay cash before you receive cash. You pay inventory upfront, you pay ads upfront, you pay for fulfillment and software on schedule, but payouts from processors and marketplaces arrive later. Refunds can hit fast. So your bank account tells a different story than your sales dashboard. So the pillar one is the cash inflows. Let us talk about pillar one, cash inflows. Cash inflows are not your sales number. Cash inflows are when money actually lands in your bank. Here's a quick example. A store owner tells me that I made $80,000 this month, but why my cash is still tight? When we looked closer, payouts were delayed, refunds were high, and part of the money was held in reserves. So the bank deposits were much lower than the sales report for that period. So what do you do? Step one, map your inflow timeline. Ask these questions. When do processor payouts hit my bank? Do I have holds or reserves? What is my average refund timing? Do marketplaces pay weekly, bi-weekly, or on another schedule? How much of my revenue is recurring versus one time? When you understand inflow timing, you stop guessing. Mini action can do this week. Open your bank deposits and match them to your sales weekly by weekly, not by monthly, by week only. This alone gives many business owners instant clarity. Now, pillar two is the cash outflows. Now, pillar two, cash outflow, is talking about the profit leaks. This is where profit leaks hide. E commerce businesses often bleed cash in small recurring ways. Let me share a common story. A store owner says, my margin is shrinking, but I cannot see why. We review outflows and find three things: subscriptions they no longer use, fulfillment fees that slowly increased, ad spend that was never tied to true profitability. Each of them looked small. Together, it was thousands per month leaving the business. So, what do you do? Step one, categorize your outflows into clear buckets: inventory and cost of goods, ads and marketing, fulfillment and shipping, software and subscriptions, contractors, agencies, and tools, merchant fees. Merchant fee is very important. Then ask these questions for each bucket. Is this expense creating a measurable return? If not, can we reduce it, renegotiate it, or remove it? Mini action you can do this week: print your last 60 days of bank and credit card transactions, circle every recurring charge. If you cannot explain the value of one sentence, it is a leak until proven otherwise. And the pillar three is, let me slide the screen for you. There you go. Timing and cash cycle. Now, pillar three, timing. This is the real skill. Most cash flow problems are timing problems. Here's a simple example. You buy inventory today, you run ads today, you ship today, but you get paid later. If your cash cycle is longer than your payout cycle, you feel pressure even if you are profitable. So what do? You measure your cash conversion cycle. In simple terms, how long cash stays trapped before it comes back. So this is about the pillar three, which is our timing and cash cycles. Now, next is the inventory balance. Inventory is very important. Let me slide the PDF for you. Inventory is very, very important. Inventory is the biggest cash flow lever in e-commerce. Over ordering creates trapped cash. Under ordering creates stockouts and lost sales. The goal is not maximize inventory. The goal is the real inventory. A simple way to think about it: every extra unit you buy is cash you are choosing to store in a warehouse instead of in your bank. Mini action, what you can do: create reorder using real sales velocity, not emotion, and plan purchases based on cash availability, not just optimism. So what good looks like here? When cash flow is healthy, you feel it, right? Everyone needs a healthy cash flow. You know your cash runway, you know your weekly inflow pattern, you know what you can spend on ads, you know when inventory can be reordered safely. You stop making emergency decisions. This is what clarity, control, and confidence looks like. So if you want to help applying this inside your business, this is exactly what we do through our profit and cash flow analysis. This is not what about fancy reports. It is about seeing how money actually moves through your e-commerce business, where cash is getting stuck, where profit is leaking, what to fix first for the biggest impact. So if you want to learn more, message me the words cash flow and I will send you the details, or use the link in the post to book a quick call. Let me slide this again for you so you exactly know what we are talking about today. How to gain control about more sales. What are the real issues? Sales do not equal cash. Profit does not equal cash. Cash flow is timing. E-commerce pays out much better later, but expenses hit now. The three pillars we are talking about right now, it's very, very important: cash inflows, cash outflows, timing. Pillar one is cash inflows, pillar two is cash outflows, and pillar three is timing. And next is inventory. Inventory is the biggest challenge. So guys, this is our short conversation on how to fix cash flow. If you like my post, if you like my event, comment on my post, like my event, so I will be keep doing more lives like this every week. Next week also I will be doing some live. So you guys stay in touch, let me know how I can help you in e-commerce industry. And till then, I wish you a good luck, happy journey, enjoy. Thank you.